All right, hi everyone. So I'm doing this Forex 101 crash course because I've realized that I post on Instagram and Facebook all the time about Forex, and I understand that a lot of my audience probably has zero idea of what Forex even is. So I feel that I should give you guys a crash course really quickly, breaking down what am I doing here. so um, let me know where you guys are hopping on from. Drop some comments on my live. Let me know where you're coming in from, and I'm just going to give it maybe 2 more minutes. So I'm going to try my best to show you guys my screen. If you want to get on a Zoom call, I'm actually on a Zoom right now, so you can see better. But the Zoom will be recorded, so you can watch the recording later too if you want. So share with us the Zoom link. Okay, I got you. Give me 1 second. All right, so here's the Zoom. Hi, Mike from Dallas, Texas. Nice to meet you. So here's the Zoom. If you guys want to hop on, it's easier to see the screen on there. All right, so I'm going to get started. Okay, so Forex 101. Essentially, what we're doing here is that we are trading foreign currency. So if you ever travel across the country before, you know you have to exchange US dollars for whatever that country's currency is in order to spend money. So, but in when we trade these currencies on a smartphone, there's no actual exchanging going on. All we are doing is that we are looking at the value of each currency in comparison to another currency. So, for instance, we are always looking at a pair. In this case right here on my screen, we're currently looking at the British pound and Canadian dollar. So as you can see over here on this chart, price is moving upwards. And what that means is that the value of the British pound is going up in comparison to Canadian dollar. Does that make sense? I'll say it again. So when price is going up here on this chart, it means that the value of the British pound is gaining strength in comparison to the Canadian dollar. So that's all that we have to know, right? And then how we make money from this market is that all we have to do is that, here, I'll type these out so maybe you guys can see better. So all that we're doing in this Forex market is that we buy when, okay, where is it showing up on the screen? Okay, we're buying when we expect price to go up. Okay, and then we are selling when we expect price to go down. Very simple, right? It's not, you know, something that you need a college education or even people in high school know how to do this, so it's like super simple. Okay, so we want to buy when price is going up, and we want to sell when price is going down. Pretty basic Forex 101 stuff. Okay, so if we want to catch the most move, and when we're buying, would we want to buy at the top or would we want to buy at the bottom? We would want to buy at the bottom because we want to try to catch the way up. It wouldn't make sense if we buy at the peak of the mountain, right? Because we anticipate price to continue to go up, so we wouldn't buy here. So all we are doing is to identify the perfect entry points in the market. So as you can see here, it's pretty obvious. We would want to buy here at the valley of the mountain, at the bottom, right here, buy. So, and if price is going in that direction, which it did right here, goes up, then we are in profit. Makes sense, guys? So far, it's pretty simple. Same thing with selling. So if we want to sell, we would sell at the very top of the mountain because we anticipate price to go down. So we would sell at the top right here, go down, sell at the top right here, go down, sell over here, down. So that's it, okay? All right, down, yes. All right, so now what essentially happens in the Forex market is that there are major levels, and they act like, the way that I can explain it is that they act like support and resistance. So let me just draw it to the side for now. So there's a ceiling, right? Resistance, ceiling. Let me write it out so you guys can see. I'm trying to do this with one hand as I'm holding the phone on the other. So, okay, ceiling right here. Okay, so there's two levels. So there's one level, major levels in the market. It's always the same. The market always acts the same way. And then there's the support, which is the floor. So floor. Okay, makes sense, guys. Support and resistance. Okay. So what happens with price is that it can do one or of three things. So like it could either go up, go down, or stay in the middle, consolidation, right? So this is price. Price is going up, 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 and hit the ceiling. So price can do one of two things. It could either reverse off of this and go the opposite direction, or price is going to keep pushing, 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 breaks the ceiling, comes back down, and keeps going. So price can do either this, or it could do something like, it could just be in the middle, like consolidating, doing like not really going anywhere. So three options, okay? So that's all you really have to know. Same thing with the floor. So price is going down, hits the floor. What can it do? It can either reverse, go up because it didn't like that level, or it can continue go push past the floor, and move over past the floor, come back, touch it, and then keep going down. That's it. Pretty simple, right, guys? That makes sense. Price come up, touch the ceiling, doesn't like it, goes the opposite direction. Price comes to the ceiling, breaks past it, come back down, touch it to keep going up. Same thing with floor. Comes down to the floor, doesn't like it, goes the other direction. Comes all the way down, breaks past the floor, retest, and then go down. So that's how price always reacts in the market. So remember what I say, the price will either go up, down, or sideways. So buy means go up, sell means go down, right? So in this case, this is an entry point right here. Why is this an entry point? Because price is going where? It's going down. So what would we do here? We would sell. Make sense? We would sell when price is going down. And then here, this is another entry point. What do we do here? Where is price going? It's going up. What do we do when price is going up? We buy. Simple, simple. Okay, same thing over here. This is an entry point right here. So where is price going? Price is going up. So what do? We buy over here. And then this one, where's price going? It's going down. We sell. Makes sense so far? Can you please darken the line? Can you see? Yeah, let me know if you can see okay. And then there's also Zoom that I said now, Janelle, if you want to hop on the Zoom, it's easier to see. Okay, so that's the basics. So I just wanted to, quickly go over that with you guys really quick. So now I'm going to go more into the a little more advanced stuff. I just want to show you guys how like anybody can do this. Like it's so easy, even someone who's like 7 can do this. So I'm going to delete all that for now. Okay, so let's go back to the chart. So like how many of you when you first see this, it's like, oh my goodness, it's so scary, it's so foreign. Like that's exactly how I felt too when I first looked at a chart like this. I remember seeing it on my sister's computer, and I just like automatically said to myself, heck no, like I would never learn this. Like it's not for me. But you know, all it took was a decision in my head that I decided, like I asked myself, why not? Why can I not learn this? I'm not stupid. And then that's when like I opened my mind to learning the information, and it becomes like super, super simple. Okay, so essentially instead, so like back in the days when like our technology is not that great, we really have to learn. When we learn how to trade in this market, we have to identify like major levels I just talked to you guys about, like support and resistance. That you have to draw up your own levels, like where is the support, where is the resistance, like that in itself takes time to learn how to master. But because we have technology nowadays, like it makes things super easy. So there's tools out there where, you know, they use AI technology, and then they scan the market for you. So this thing is called a Harmonic Scanner. Essentially, it's like computer algorithm, something like that. All the technical stuff, I don't even know the background of it. All I know is I know how to use it, and that's all that matters. So pretty much like these patterns right here, it's generated by the technology that shows you the highest probability where the market is going to reverse. So over here, it shows you that price is most likely going to go the opposite direction. Right now, price is going up on an upward momentum, and it's showing you right here that it's about to go down. Tells you exactly when to enter, when to take profit, when to get out the market. So all we have to do, my trading strategy is that I copy this scan. Super simple, guys. Anyone can do this. We look at which candlestick the points are, copy it exactly onto my own trading view. Again, trading view, by the way, is it's free. It's a website that anybody can go onto and look at these prices. You can do Forex, crypto, stocks. I think stocks, I'm not sure, I don't do stocks. But yeah, so essentially I just like copy the scans onto my charts, and then use a few tools like connect the dots. Again, it's just connecting the dots like back in the day when we do those. I don't know if you guys ever done one of those worksheets when you literally connect like 1, 2, 3, 4 and draw a picture. It's exactly like the same thing. So I'm going to, I don't know if you guys want me to show you exactly how I do this, but I could. So let's see, GBP, CAD. So remember we were looking at Great Britain, pound, Canadian dollars on this pair. So we would come over here. This is a scan. This one, I don't like this one. I'm not going to go into too advanced stuff right now, but let me just find something. Okay, I don't think I'll do this right now. Maybe I'll do another Zoom that shows you guys how I mark up my charts and copy the scan. But right now I want to go into some of the trades that I took last night and how it translates over to profit, potential profit. I think you guys want to hear about that, right? Okay, so it's a little crazy looking right now, but all good, all good. Here, let me see. Let me pull it down a little bit. Okay, so remember I go over earlier with you guys that there are major levels in the market. So like this dotted line right here, the orange one is a ceiling, and then this one is the support. And then again, remember price will either go up here, reverse, or it's going to continue to go up, right? So in this case, I was able to get into this trade right here. I got in a sell. So this little orange dot, where is it? You see this orange bubble is where I got into the trade. And then this tool, I can measure how many. So in the Forex market, the unit of measurement in terms of like how much market has moved is called a pip. And then pip essentially will tell you how much money you make in the market on top of several other factors. So this move right here, I closed out in profit before it reversed off of me. And then this number right here is the pip. So 15 pips is how much I made in this trade. And then there was another one, I got into another sell over here, this orange bubble. So this trade did eventually hit where I wanted it to go for my take profit. So let's measure that. This was a 33 pips move. Okay, what does that mean, Nico? What does pips mean? So let me break that down for you guys. So remember, pips is the unit of measurement in terms of how much the market has moved. And then, so in this case right here, I caught a total of what, it was like 15 and 30, 35. What is that? What is that math? Sorry guys, I'm not even good at math, but I can do this. 35 and 15, that is 50, I think. 50 pips. Okay, so 50 pips is how much I got from this trade total, right? So what does that mean? Not going to go super technical into this, but there are these things called lot size, and that determines how much your each pip is worth. Here, let's move it over here. Lot size. Is this making sense so far, guys? I don't want to confuse you. Let me know if you have questions so far. Okay. So total 50 pips, and then oops. Okay. So lot size determines how much per pip is worth. Okay. So basically, it's like the leverage you're using in the market, but there are some variation. Essentially, like the overall idea is that the smallest lot size 0.01. Here, let me show you. 0.01 is 10 cents per pip. 10 cents per pip. Okay, and then 0.10 lot size is $1, I believe. I gotta go back and study some more to myself. I'm still a student, by the way. Disclaimer: I'm not a professional Forex trader. I'm just showing you guys the basics for what I know. Yeah, disclaimer. Okay, and then standard lot size 1.00 is $10 per pip. So, okay, does this make sense so far, guys? 0.01 lot is 10 cents per pip. 0.10 lot is $1 per pip, and if this is called standard, it's $10 per pip. So this is where Forex gets crazily exciting, because the same move over here, the same move, 30 pips, is the same way someone can make, what is this, $3 from this trade. It's the same way someone can make $30, $300, $3,000, and so on. The same move. So it's the same exact skill set that once you master, the only thing that's going to change is like how much money you have in your trading account. And then you can grow your account exponentially. So I hope that makes sense, guys. And then this is another trade that I entered last night. Oh my goodness. Looking at it just hurts my soul. This was 300 plus pips trade. I got in down here. I got in a buy down here. I mean, I still took profit. I closed out early, but look at it, just went all the way to the moon. That means 300 pips could be what, $30 minimum profit, I believe. Guys, like I'm not even good at math, but everything's done for you, like with technology. Like I don't need to do my own math. I'm just saying, like, this could be $30 right here, or 300, 3,000, 30,000 in one night. That's the potential, guys. That's the potential of Forex. That's a month's worth of tips. Yeah, it's so exciting. And then it's like I barely need a stop loss over here. Um, and now I got into a sell down here. This sell. Let me just show you guys. It's kind of hard to do it on my phone, but just watch the recording if you guys are confused. It's easier to see. But I also got into sell right here, which was 39 pips, which is still a lot, right? So right now, what I'm working on is really mastering how to get out of my trades. I tend to get out too early, and I don't catch the whole move, but at least I mastered the entry. So yeah, that's like pretty much it. Like it might be a lot for beginners, but you know, I just wanted to show you guys how simple this is. Like anybody can copy and paste. Anybody can copy these scans onto your own chart. Anybody can connect the dots, and all you have to know is like again support and resistance, ceiling and floor, ceiling and floor, if it's breaking or not. Simple stuff. So if you guys want to learn more, feel free to hit me up. You know, I'm all about Forex. I'm all about it because I just showed you guys how powerful it is. And yeah, send me a DM. Let me know if you guys want to learn more. And also for Bay Area local people, I'll be doing in-person training, coffee meetups. You know, stay tuned for the updates, and love to meet all of you guys. All right, so you could rest $100 and gain 3,000. You could risk $100 and gain $3,000 in one night. Yeah, well, depends on how much you have in your account. That's something we can go over next time. But all right, guys, thank you so much for hopping on. Really appreciate you. Hope you guys learned something new today. Again, we don't know what we don't know, so always stay open-minded, always remain as a student. All right, guys, love you so much and talk to you soon.